Hi, welcome to this video today, which is on the 7th of October. It's Wednesday. Just want to give a very simple Forex money making tip in this video, which is to focus on fast moving volatile pairs with clear cut fundamentals in favor of one currency over another. Now, you may think that's a very obvious tip. Most Forex traders do not scan enough pairs at all. They'll restrict themselves to the majors, maybe a few crosses, and ignore the minor currencies. That's very often where you're going to find the best opportunities. In this video, I want to focus on USD TRY, so US dollar against the Turkish lira, a minor pair. However, you probably got it on your trading platform. And for us, over the last few months, this has been the best pair of all to be trading. Clear-cut fundamentals, volatile, and a big uptrend in favor of the USD. It's moved up around 15% since we got interested in it, and I think it's got another 20 to 30% on the upside. So I'm going to give my outlook in terms of USD TRY and also tips on how to get in on a big trend in motion. Now, in terms of minor pairs, yes, we do look at the majors and crosses, major crosses, but the minor pairs very often give us our best opportunities of all, and this is a fantastic opportunity in our view. So what we are going to do is we are going to go and take a look at it. But just before we do so, please do keep in mind it is my view as of right now. It can of course change in line with the market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, you can click on the link beneath this video and get live access to our member center. You can also follow us on our Facebook page and also join our Facebook group of traders. Right, let's go and take a look at the trade setup. USD Turkish lira daily chart, and when we're in this tight sideways consolidation where my cursor is, you can see how low the volatility was. We felt the USD was a buy on a breakout. We get the breakout here, and then we're off to the upside. And put this on a Facebook page, in the Facebook group, and obviously it's been on my personal pages as well as a really good risk to reward trade on a breakout, and it's proved to be so. Okay, now in terms of what we said at the time was just use a small position. You don't need a big position, okay, and you don't. It's a fast moving volatile pair, 15% up so far, could move up 20 to 30% more. I'll come back to the technicals in a moment, but I want to just go through why we are so bullish of the USD and bearish of the lira. Now, I'm going to start with this quote here, which quotes Erdogan, okay, efforts. That is the president of Turkey. Just want to read what this quote says. While Erdogan's efforts to make Turkey great again may be winning support from the country's poorer classes, the military adventures are costly, create a financial burden on the lira that are turning Turkey into a poor, self-locked nation. That comes from Gasper Markosian at FPS, and I think he's right. Turkey, the economy is not doing well, and a lot of the fault lies with President Erdogan, and now he's got involved in military excursions that are expensive and are just simply not a good idea. He's already been involved in Libya and Syria. He's got a standoff with Greece in the Mediterranean. Now he's getting involved in the conflict in Nagorno-Karabakh between Armenia and Azerbaijan, which I think is a huge mistake, keeping in mind Turkey's history with Armenia. Okay. Also, there's the potential for US sanctions because Turkey, which is a member of NATO, is looking to buy a sophisticated Russian missile system. America's not happy about that at all. You could well see sanctions come into play. So this kind of make Turkey great again that Erdogan is pursuing to try and get support. Just not a good idea and very expensive. But what about the economy? Well, heavy impact from the virus, but most economies around the world have had an impact from the virus. But the problem for Turkey is it has big foreign debt, and it relies on capital inflows from abroad, which have dried up. And as the USD rises, the debt becomes more expensive and default risk rises. So from back here, just a few months ago, to here, the debt is 15% more expensive. And Turkey has huge overseas debt. Now, the central bank itself has depleted its reserves to defend the currency, so it can't intervene to push the USD down. And just how expensive raising money is for Turkey now. Let's have a look at this that happened yesterday. It sold 2.5 billion of debt to international investors. That was its first move into global markets since February. The bonds were priced at 6.4%, compared with 4.25% for a similar issue in February. So a lot more expensive. Okay. Now the USD has been strong, despite the dollar being generally soft over the last couple of months or so. But the dollar hasn't been soft on the lira, has it? It's a really big move to the upside. Also, we've had risk on. That should help the lira, but it hasn't. The USD very strong. Now, in general terms, we expect the USD to mount a broad-based rally against other currencies, and we expect risk off, which means the dollar will just accelerate to the upside against the lira. I'm not sure if I said it earlier, but I think this could be like the Argentinian peso, which we saw a little while ago, where the USD just melted up. I think it could happen with the lira. We could go as high as 10, so 20 or 30% on the upside. No question that President Erdogan's authoritarian rule has undermined confidence in Turkey. Okay, so yeah, big uptrend, but we could see more upside. Now, in terms of the breakout, when we break out, if we're looking for a strong trend, we'll normally look for prices to find support into the 20-day moving average, the green line here. So we do come back to the 20, find support after the initial break, push up, find support, and now we're moving to the upside. So 20-day moving average is an average to keep in mind if it's a big, strong trend. It doesn't always just bounce off the average as we've seen here. Sometimes you get a poke through or whatever, but if it's a strong trend, you're looking for prices to recover back above the average if it pokes through. Okay, so in terms of the trend, the way I see it right now, go to a trend line there. First level support, and then the big support is going to be there. So my own view is if we came back through the 780 level, you could just buy back through 780. Okay, if you came back through this level here to the mid-Bollinger Band or 20-day moving average, look to buy back above that level. Okay, so if she pulls back, you come in on strength. Okay, you don't just buy into the 20-day moving average or a level of support. Now, what if we don't pull back? My own view is if you're really bullish, okay, just put a small trade in. Then if you do get a melt up, you're in the market with a small position. And if you pull back, you can add in, okay? So for me, I just do not see much downside. If I wasn't in, I'd put a little position in. Then if we dip back below 780, buy back through that level. We come through this level here, see if the 20-day moving average holds, and then come back through that level. If we were to go through the 20-day moving average, I would just buy back through it. Obviously, I can't say exactly what's going to happen, but I've just got a feeling that dips will be buying opportunities in USD try. So yeah, it's our favourite position at the moment, just because it's so clear cut in our view in terms of the fundamentals being in favour of the USD, but only a small position, okay, due to the high volatility in this pair. And we have very often stressed this. Small positions, can make you a lot of money if you're focusing on big trends, and this is a big trend. So we'll see how it goes. But yeah, I'm looking for more strength, pullbacks, buying opportunities. That's the video for today. Thank you very much for watching me. As usual, take care. Have a good day.